We had the meeting with President Biden, President Xi. Not a lot came out of it, except they did talk. They didn't fight with one another. I guess that's good. But overall, do you think this affects the status of investments right now? That in fact, U.S. and China may be at least not at daggers drawn.
I think there's two issues to think about from this week's meeting and over the long term. One is geopolitical issues, which I think did become reduced a bit this week. You saw that with CDS spreads narrowing a bit. But the main issue with China is exports. They've declined significantly in terms of what they export to the U.S. over the last 5 years. And that, I think until they can turn that around, that's going to be an issue. And there's other countries that are benefiting from this, like Mexico with its nearshoring, the increased need for infrastructure in the U.S., which is a segment of the market that we really like. Countries like Indonesia with young populations, and Japan, which is benefiting with their weaker yen. So as China loses in these areas, these other emerging and developed international countries are winning. And I don't see that trend reversing in the near term when it comes to China's exports to the U.S.
Peter, you talked earlier about commodities. We often think about China when it comes to things like copper, for example. To what extent is the demand for copper, the price of copper, going to be determined by what happens in China and whether they can really rebound in their economy?
Well, I think a lot of that, and you could see earlier this week they laid out the objective by doing a big soybean purchase, right, which reminds us of the early 70s when you had another crisis and they came in and bought a bunch of grain before President Nixon went to China. But I think the history lesson here is that emerging countries and their markets understand that if you partner with the U.S., you get rich. Now, you've had growth and they got rich, and then they're like, okay, we don't need you anymore. This crisis in China has made them realize that if you want to stay rich, you need to partner and continue partnering with the U.S. So what Saira said is critical. And yes, so they need our capital, as Ambassador Manuel just said. But people aren't going to fly in there. They have to demonstrate that the capital is going to be safe, that the human capital in China is going to continue to be safe. So it's going to be a little bit of a slower process. And that's going to be reflected not in immediate demand for commodities and copper, but a slow and steady demand, as Saira was saying earlier.
Saira, just briefly here at the end, what does that mean for other opportunities? For example, in China and Japan, I think you've just gotten back from Japan, have you not?
I was in Japan last week, and Japan's economy is growing very strongly for two reasons. One, the increased focus on governance, not only within the country, but from non-Japan investors. Secondarily, Japanese government is very focused on getting individuals out of cash into more investable asset classes. And second is the Japanese economy is going very strong. The yen has been weak. However, our view is with some moderate inflation that we're seeing in Japan and likely higher interest rates, I think the yen is likely to bottom and reverse from here. But that does not unwind the Japan story that has been very strong this year and should continue.
And finally, Peter, also Mexico is a lot more attractive than it was.
Absolutely, for the near sourcing, for their innovation. And, you know, again, climate change has a little impact on that because we were saying earlier that the Panama Canal is low. So Mexico's trying to build and increase their transportation infrastructure. I just want to add in 10 seconds. China, Japan, that story, that's bearish for U.S. treasuries because they are both selling treasuries to focus on their domestic economies. It's a globally integrated world, so you have to be careful what you wish for.
What about that? Just in a word or two, Saira, do you agree there's a problem here with foreign buyers of treasuries?
I think Peter makes a good point, and that could be a headwind.